This week, the market reminded traders of something very important. Momentum returns incredibly fast when fear begins to fade. The S&P 500 gained roughly 2.3% this week, while the Nasdaq 100 surged more than 5.4%, showing clear leadership from growth and technology stocks once again. What stood out most was not just the rally itself, but the character of the rally. The market spent much of the past several weeks trapped in uncertainty, interest rate fears, recession concerns, geopolitical headlines, and questions about AI spending sustainability. But this week, buyers aggressively stepped back into growth. The Nasdaq clearly outperformed the broader market, which tells us institutions were rotating back toward AI infrastructure, semiconductors, cloud computing, and high-beta growth names. This is extremely important for LEAPS traders, because LEAPS perform best when long-term secular trends remain intact. Institutions continue accumulating growth, and fear begins transitioning back into optimism. However, this does not mean traders should suddenly become reckless. One of the biggest mistakes traders make after a strong green week is emotional chasing. Professional traders understand strong momentum often creates short-term overextension. That's why patience still matters here. The market is currently rewarding confirmation, disciplined entries, and emotional stability, not panic buying. One thing I continue watching carefully is how growth stocks behave after large momentum expansions. Healthy markets usually consolidate, hold support, and allow moving averages to catch up. That creates much better LEAPS entries than emotionally chasing vertical candles. For me personally, this week reinforced several important ideas. Volatility creates opportunity. The fear from previous weeks created better long-term setups for patient traders. AI remains one of the strongest long-term themes in the market. The Nasdaq leadership continues confirming institutional demand for growth and compute infrastructure. Emotional discipline matters more than prediction. The traders who stayed calm during volatility were rewarded this week. As always, my focus remains on quality companies, confirmation, implied volatility, and proper risk sizing. Because long-term success in LEAPS trading is not about predicting every market move. It's about surviving long enough to compound consistently. Cash is still a position. Patience is still a strategy. And volatility continues to create opportunity for disciplined traders.